Hey guys, welcome back to another video. So in today's video I'll teach you the liquidity trading strategy, or you can call it stop loss hunt trading strategy, which I use and which is very useful, and I make lots of profits from it, and it helps me a lot. And this is the only strategy which I use, and this is the whole market on which it operates. So today we'll discuss on this topic. So without wasting time, let's get started. So welcome back to my channel. Now let's understand that what's the liquidity strategy. Okay, so liquidity, okay, the term liquidity means the stop losses of lots of traders, or the buy orders, sell orders, buy limits and sell limits. Okay, those are called liquidity. So for example, wherever you will put your stop loss, at that point there can be thousands of people or like millions of people there who will be putting their stop losses over there. So for example, if I should show you one example, yes, this is the example. So this was the really good supply zone, right? Over here, it's a really good supply zone. Like if you are trading with normal price action terms and like with that rule, so this is a very good supply zone. Okay, because price got reflected from here once, twice, and thrice. So this is a really good, what you call a demand zone. Okay, so now what happens when the market opens in London session over here? Look at the time below. It's 2:45. Okay, so what do you think? What will be over here in this area? Like this portion, what will be over here? There will be a buy orders, sell orders, and there will be lots of orders, but most of the orders will be breakout orders, so breakout sell. Okay, so people will be selling from this breakout, and their stop loss will be somewhere around over here. Okay, and now some people will be buying from here, and the stop losses will be a little bit over here. So this how their stop losses get hunt, and then market goes into their direction. Okay, so this stop loss hunting over here at this point, it's called liquidity. So it's a sell side liquidity. Okay, so the stop losses which are below of demand zone are sell side, and the stop losses which are above of the supply zone, there will be some stop losses over here also. Okay, so the stop losses which are above of this supply zone are called buy side liquidity. Okay, and now you will be saying that why should I buy from here, and so I can sell it from here or no? Okay, so this is the question. So now you have to go with the order flow. So now how you will get to know about the order flow? With a higher time frame analysis. Okay, so let's go on 1h time frame, and let's go on 4h time frame. Okay, so now what you can see is that this was a really old low, okay, of December 24 over here. So what price did? Price went down, and from a pinpoint it took the stop losses from here, right? It took the stop losses from here. So now the sell side is taken. Okay, so now where is the buy side? Like that's the question. So the buy side will be above this high, and over here there will be buy side liquidity. Why buy side liquidity? Because there will be people, those who will be selling from this, okay, from this supply zone, and they will be selling from this supply zone, and they will be selling from this supply zone. Okay, so now there were some people, those who were buying from here. Okay, and these people were waiting for so long, and like lots of people bought it from here because they thought like it's a really old low and it's a strong support or demand zone. But what I told you, that there are stop losses below of this demand zone. Okay, there will be sell side liquidity. So price took the sell side liquidity, and now market is going high. So higher time frame analysis tells you about the order flow of the market. So now you know that market is bullish till the price goes and takes this high, then you will wait, and when price will go and take this high, then you will wait, and when price took this high, okay, and now you can see that there is this fair value gap, or sorry, there is this imbalance over here. This is not a fair value gap. Okay, you can see the imbalance. Price filled that imbalance, and then it gave a wick out and body closed above over here. You guys can see, I should zoom in a little bit. So now that's why our bias will be bullish. So on smaller time frame over here, I should delete it. So in smaller time frame, we'll look for the price to go and take the sell side liquidity. Then we'll take the buy. Okay, we will not take the sells from like the buy side liquidity. We will take the buy from the sell side liquidity like this. Okay, because if you take a sell from here like this, your stop loss will get hit. Okay, because the overall order flow on higher time frame is bullish and price is going higher. Okay, so this is a liquidity run. This is not a liquidity hunt, or what you call it, liquidity hunt. Yeah, this is not a liquidity or stop loss hunt. This is a liquid stop loss run. Okay, so price will run from here. This is a liquidity run. So price is filling the liquidity over here, but over here what price was doing, it was just tapping out all the traders out of the market like this. Okay, they were just kicking out all the small traders, like those who thought like it will be buy from here, or they thought like price will go down from here because it's a breakout. So they kicked out all of them, and then so over here you have to enter, okay, not over here for a sell. You should enter from here for a buy, and you can just place your buy limit over here, and your stop loss can be like whatever, like 50 pips or 40 pips, but don't do it like this, okay? Don't, just give some enough room to breathe, okay? Give enough room for the price to breathe, okay? It can move around a little bit over here, so be careful, okay? And now, and try to take it from more below. For example, like you get a very good pinpoint entry from here, okay? Everybody can get a very good pinpoint entry from here if you guys can use round psychological number. Like you can see over here, it's like 150.000 150, okay? So this is a round psychological number. This is a bank level, okay? And those who don't know that what's a bank level, and they think like something else is a bank levels. So I have a dedicated video of bank levels on my YouTube channel. This round psychological numbers are called bank levels, okay? So you can buy it from here, and your stop loss can be 50 pips, and you can target for buy side liquidity. Where's the buy side liquidity? Over here is the buy side liquidity. And now you will say, like, you know that the price will go for a liquidity run from here, so why should stop over here only? We can target for more profit. But the thing which I should say, that you should follow your risk management, okay? You should not be greedy. So you should go for at least 1:2, or you can go for 1:3, okay? So as we know that it can go more up from here, so what you can do is you can take out some profits from here. All right, you can just take out some profits from here, and then you can leave a little bit of lots open till the price goes and takes another buy side liquidity right over here. So like this, how you can do, okay? So this what the strategy is. You have to look for liquidity. There are two types of liquidity. One is buy side liquidity and one is sell side liquidity. Buy side liquidity are found above of the supply zone, okay? And the sell side liquidity is found below of the demand zone, okay? Sell side liquidity is the stop losses of the traders, those who are buying from here, or the traders, those who are trying to sell it from here, those who thought like it's a breakout, okay? And the stop losses on the buy side liquidity is also the stop losses, the guys those who are trying to sell it from here, and they put the stop loss like this, or the guys those who are buying from here. And now people will say that, okay, so because of this, so like all the retail traders make losses. No, all the retail traders does not make losses. It depends on psychology, first of all, okay? That's the 80% of the game. Psychology and risk management, okay? And the strategy, you can learn strategy, but you cannot learn psychology. Like you can learn psychology, but you cannot implement it, okay? You can learn strategy. See, I'm teaching you the strategy. So does it mean that you will be a best successful trader in this whole world? No. Okay, you have to train yourself for years. You have to train your psychology for years. You have to train your risk management and emotion for years. Then you can be a very good successful trader in this world. But the thing is that by knowing one strategy will not make you a successful trader. You have to be consistent, disciplined, and everything in one scenario, one frame, okay? You have to do everything in one frame. So that's why the traders, for example, breakout traders, they also make money. I'm doing opposite of them. That this doesn't mean that like they don't make money. Like people, those who will buy from here, and they will put the stop loss over here. Who knows, the market will go more up and they will make money on this breakout, okay? Because the guys, those who trade breakouts, they also don't know about the order flow, okay? So whenever they are with the order flow, they'll make money and they make profit, and whenever they go against the order flow by selling over here, they make losses. So this is the whole scenario, okay? So now this is the example. So you know what's the liquidity, okay? I told you about the liquidity and how to implement it, how to take the entry, and how to place the stop loss. And now let's talk about a little bit about the risk management, okay, which is really important. The risk management is like you should target for 1:2 or 1:3 maximum. You should not go for 1:5. Although you can go for 1:5 with the runners. For example, you took out like 80% of your profits from a single trade and you left 20% of the trade running. So you can go for 1:5 on that, okay? But this does not mean like your main chunk, your main money should be out from the market at 1:2 or close the whole damn trade on 1:2, okay? So because this is very easy, risk management is very easy, but the greediness is the thing which is like obligation, which is like what you call it, like this greediness is the main obstacle in between, okay? It's the main obstacle because people know that they should close the trade at 1:2. People know about that. People know about that you should don't be greedy, but they should close at 1:3 or 1:2. But because of the greediness, okay, or greediness in the sense like we are all human, we all have emotions, okay? So that's why people think like, oh yo, like I can make a little bit more. Because of that, market comes down and takes their break even. Like this happened with me thousands of time. I took lots of trade. I have lots of journal, okay? And whenever I go back in my journaling or I put that journal in AI and I make a dashboard out of it, I can see that there were so many trades, those who got back, like it was in profit of 1:2 or 1:3, and I thought like I will get 1:5 or something in my beginning year or like in my beginning days. But what happened, market went down and it took the break even, or sometimes it went down and took my stop loss. It was so fast, okay? I forgot to do it break even and my stop loss got hit. So that's why you should have a fixed number of taking your take profit. Okay, you should be fixed, like I will make only 1:2, or I will make only 1:3, and I will close my whole trade. Okay, like that should be important. And risk management is very easy, but it's hard to follow because everyone is greedy. Okay, everyone loves money, more money. Okay, so that's why you have to be a little bit disciplined about it, that no matter what, I get 1:100 from it, but it does not matter, right? You cannot get 1:10, 20, 30, 40. You cannot get it every day. If you get it every day, 1:2, 1:5, 1:10, then you will be the richest man on this world. Okay, because if you can make it consistently 1:50, 1:100. But the thing is that you can make 1:2 every day, or not every day, but consistently. Yeah, in a month you can make most of the times 1:2. You can make profits. Okay, so this is what I'm trying to explain. Okay, so the risk management is a simple one, and the psychology plays the more important role. It doesn't mean if you take a trade and your trade gets wrong. Okay, and now I'm not saying that if you will use this strategy of this buy side and sell side liquidity and this type of entry from here, this is aggressive entry. Some people wait. Okay, there are some people those will wait for price to give a market structure shift. So suppose, okay, you're waiting for a market structure shift, but you will say that I will go in smaller time frames. Okay, let's go in smaller time, 5-minute time frame. There's no entry on 5 minutes, and there's no entry on 1 minute also. Okay, you can enter from this imbalance, but like it's not practical. Okay, you cannot, you will be not able, it will be so fast that you will miss it. So let's think, like let's see, you're waiting for a market structure shift on 5-minute time frame. You're thinking that price will go up and take this high, it will give a market structure shift over here, and then when you see this market structure shift over here, you are waiting for price to come down to this fair value gap, right? And then you will take the entry over here, and you are thinking that you will place a stop loss just a little bit below of this, and you will make 1:20 from his. Okay, this does not happen. That's why I'm a little bit aggressive, and I place my limits like the banks do, like the big institutions do. They will look for the round psychological number below of this liquidity. Okay, below of this demand zone. So below of this demand zone, if there is some bank level or there is this round psychological number, place your buy limit over there and place a stop loss like 50 pips or 40 pips below from there. Okay, because this is how the banks do, like they will just place their limits, like they just place their buy limits or sell limits like this. Okay, and then they leave, or they'll see just monitor, because there will be millions of people those who took a buy from here. Okay, and there will be millions of people those who took the sell from this retest over here. If you guys can see, there was this retest. Okay, there were millions of people those who took the sell from here. Okay, all of their stop loss got hit over here, and the people those who took a buy from this or from here or from here or from here, okay, the stop loss was over here. There were millions of people those who took the buy from here, and their stop loss was below over here, but their stop losses got hit. Okay, because algorithm is coded in such a way, it's like a magnet. It goes for the liquidity, it goes for the stop losses of many traders, like lots of retail traders, like you should, like this is a quote, like you should enter where masses put their stop loss. Okay, you should enter from there where the masses will put their stop losses, the lots of people will put their stop losses. You should enter from that point like this. Okay, so this what all about. Like I think so the video got really long, but like I tried to explain you in like easy words. I explained you what's buy side liquidity versus sell side liquidity, how to enter, and what's the round psychological number from where you should enter, and I told you about the risk management, and I told you about the stop loss placement. And now I should say that if you guys follow these things with the disciplined way, and you guys have a really good lifestyle, a disciplined lifestyle, okay, and you are a little bit, what you call it, like, and you're a little bit emotionally controlled, then you will easily succeed with this strategy. Okay, you'll easily succeed with this strategy because you have a really good emotional control. So it means you are really disciplined, and if you're really disciplined, you will make it in trading. Okay, you have to be disciplined, and it's in life also. If you are not disciplined in life, you will not make it, but if you're in discipline in life, in any field, you will make it. Okay, so be disciplined, follow the rules, follow the risk management, wait for the trade to go and take the stop losses, look for the order flow from the higher time frame. Okay, look for the order flow from the higher time frame. If the order flow, do your analysis on a higher time frame. If the order flow is bullish, then look for buys on a smaller time frame. Okay, and now you say, how should I know that what time frame I should go on? Okay, the time frame, it depends, like 4H, daily, and weekly. These three time frame will tell you the order flow. Okay, what's the order flow, where's the market, where's the overall market is going, and your entry can be on 15-minute, 5-minute. Okay, this is what your entry can be on 15. You can enter on 15-minute, or you can enter a trade in 5-minute. Okay, if you can see that 5-minute is a little bit messy and you are just confused, then go on 15-minute time frame. You will get a clear picture. Okay, and then you can take the trade, and it happens every day and every time. You should look, you have to look for it. Okay, so first thing, one more time I'm telling you, first thing, you should look for the overall bias from higher time frame. Okay, you look for the overall bias from the higher time frame, and then you saw that it's bullish, so you will look for bias on a smaller time frame. You went on smaller time frame, for example 15-minute time frame. You found out that there is this supply zone. This is a really strong, oh, no, not sorry, not supply zone, demand zone. You found out that this is a really good demand zone, okay, and you found out that this is a really good, take your time, what's this, this is a really good supply zone, okay. So what's above here? Stop losses was buy side liquidity, okay, and there will be sell side liquidity below here. So now you know that you will not take the sell from here, you have to take the buy from here, okay. So you will place your buy limit. So now you will look for the round psychological number over here. You found a really good, if there is no round psychological number, just take the trade a little bit below of some few pips, like 15 to 20, 10 or 15 pips, like take the trade from there, okay, because everybody can, like, see, if somebody is taking a buy from here, the stop loss will be not over here, okay, it will be like 15 pips or 20 pips, okay, like this, or 30 pips maximum. So like this, what happens, maximum 30 pips, you can see over here, and the stop loss got hit, okay. So now you can see that you will take a buy from here, and then where your target will be, sorry, your target will be this buy side liquidity over here, okay. So now when price will go and hit this 1:2, you will close the trade, okay, and then you will do the journaling of this trade, that what I did wrong and what I did right, and what I learned from this trade, and how much time this trade took to go and hit my take profit. How was this trade, what was my emotions while taking this trade, what I thought, how I'm feeling now after winning the trade. You have to write down all of these things in your journal, okay. And now the people, those who take 20 trades in a day, or 15 trades, or 5 trades, or 10 trades in a day, they cannot do effective journaling. To do effective journaling, you should take few trades in a week, like 3 or 4 trades, then only you can do effective journaling, okay. And in a month you should take like 20 trades or 15 trades. Like 15 trades is a lot. Like you should take like 12 or 13 trades, that's it, in a month, and you'll make lots of profit, okay. So I hope you understood this strategy. You understood that why your stop loss get hunt, and you understood the psychology or the reasons behind your stop loss hunt. And I gave you a strategy which is on the base of, which is on the, what you call it, like, which is totally based on this liquidity, okay, and it will help you, and it's like really effective strategy. And I told you about the risk management and everything. So go and do this. And if you guys have any questions, okay, if you guys have any questions, you can ask me in the comment section, and you can DM me on Instagram. I will drop the links of my Instagram, or you can join my Discord group, okay, or you can ask me questions over there also on my Discord. So go and practice, and until next time, wish you good luck, be safe.